Sean, much has been made about that story and the VIX and on the S&P 500. Just give me your thoughts and your initial takeaway.
Well, I think we've got a period where real bond yields have been turning negative in most of the developed markets. That's been accompanied by a fall in the dollar, and we've actually in the background got a resurgence in global trade. So it's a pretty perfect world for the economy and for equity markets, and I suspect that's why we've had such a low reading on volatility measures in the equity market over the last couple of weeks.
Sean, what's interesting about this is people often come out and say that this is a sign of complacency, but realised vol, historical vol, is also very low. So isn't this just a case of the market being right?
Well, I think it's the markets have actually taken quite a bit of time to realise that things were nowhere near as bad in the real economy as some of the sort of geopolitical factors that were appearing in the headlines over the last 6 months. And if you take a look at the Kospi today, I mean, it's been breaking out into, almost new highs in dollar terms. And yet that country has seen an impeachment of the president, North Korean issues, a spat with China, and it's not at all affected the equity market sentiment and indeed the real economy. So, as I said, I think geopolitical factors have masked what has actually been a pretty good resurgence in the global economy.
So, Alan Ruskin, how much should the central banks, the Fed, the ECB, Bank of Japan, really get some credit for this? Because they actually have been telegraphing where they're going, what they're doing. They've been acting gradually, and it actually has quieted things down.
Yeah, I'm not sure I'd give them credit for it. Remember, back in 2006, 2007, obviously, we had some low vol. And vol was low precisely because policy was being telegraphed. And the telegraphing didn't end up very well. So I'd be very, very cautious here in terms of giving them credit at this point in time. I think we have to be cautious as well in so much as there's quite a bit of contango on the VIX market, for example. If you look at your UX6 index, for example, 6 months out, it's definitely steepish curve in terms of volatility. That's one thing. Stock market volatility is lower than pretty much everything else, although bond markets vol is pretty low, FX vol is pretty low, but stock market vol is particularly low. And I think, to me, bond market vol is going to be the key to all of this. And underneath, and I think that what you mentioned earlier, which was this idea of this uncomfortable low volatility, underneath, lurking there, is commodity vol. And I think that's what you're seeing. There's a China story there, and there's a commodity story there that's lurking beneath this.
Well, let's go to the China story specifically, because if you're not going to give the central banks any credit, will you give President Xi some credit? Because there was a time when we got a lot of volatility because China was all over the place. They've been pretty consistent now.
Yes, I think it's it's blowing hot and cold, unfortunately. So I think you went from way too much volatility, and obviously the equity market seemed to be a little bit out of control for a while there. The foreign exchange market was unstable by Chinese standards. That's it shifted to some extent, not always in good ways. I don't think necessarily it's a good thing that dollar-China volatility is contained. I think a little bit of volatility, in essence, is a good thing, really. It keeps the market on its toes, and I think you get real prices from that.